now post-elections, the chatter is what the budget is going to be like, whether there's going to be any mega or big announcement. Is it going to be a status quo kind of budget? Because the next one is going to be again back in 6 months.
Hi, good morning, Aisha. Thanks for having me. I think our overall sense is that largely the bullish bias which we were carrying prior to election outcome remains intact. I think the only challenge what probably we need to sort of look at the element of populism which might come by. And if the quantum is not so high, then I think overall directionally things are going to remain intact. And I think sectoral biases and even Nifty target of 25,000 should remain intact. I think now going forward, budget and the overall earning growth of 14-15%, which is what we are estimating, I think will sort of drive the market. But our overall sense is that one needs to sort of watch out for budget plus the element of optimism. Although there's some headroom in terms of higher RBI dividend plus, obviously there can be structural savings on the subsidy side, especially related to fertilizers. So it remains to be seen how they sort of utilize. But our overall sense is that with policy continuity in place, bullish bias is intact, and all sectoral positioning with respect to capex, infra, or related beneficiaries should hold ground.
Right, Pankaj, morning. We were closely monitoring what was happening when it came to the entire FMCG space, especially post that election verdict initially. But it turned out to be a bit of a flash in the pan move. Do you believe that there's actually merit in looking at this space for the long haul?
I think this is one space which is done very well when most of the segments of the market were not doing well. And our sense is that at best, even with a better monsoon, we might be looking at a 9 to 10% kind of a lower or a higher, lower double-digit kind of a growth at max, which means that they are not going to sort of outperform Nifty. And on top of it, when you look at some of the commentary that most of the companies have been sort of driving the growth through better margins, and with the local brands sort of competing well, our sense is that there will be pressure on the margins. And which is why we feel that this is one space one should not be sort of positioning too much from a portfolio perspective. We're not structurally be positive on this space.
If you like this video, then like, share and subscribe to ET Now.